Hello? Yes. Yeah. Good afternoon, and welcome back from lunch. My name is Evelina Kurgonaite, and I'm the founder of Womenat. And for those of you who don't know what that is, it's a global platform that connects and promotes women professionals. And it is in that capacity that I'm here with you today. And besides Womenat, I also have a day job. I'm a Secretary General at the Fair Standards Alliance, which is a business association in Brussels that advocates for fairer licensing of standardized technologies. So standard essential patents is what keeps me busy. And before I turn to introducing my panel, I would just like to thank the entire LEA team for having Womenat at this excellent event. And thank you very much for giving me a reason to come back to the beautiful Roma. So now, turning to my panel, during the remainder of this our session, we plan to circle more or less around Europe and hear directly from representatives of 3 competition authorities on what has been driving the day in their respective authorities. And so with me today, I have Shion O'Keefe of the Netherlands Authority for Consumers and Markets. I have Micaela Arias Domecq of the Spanish National Markets and Competition Commission, and Jenny Sugiarto of the UK Competition and Markets Authority. Shion has been with the competition enforcer for 20 years. So since 2003, and in those last 2 decades, she held a variety of roles. Currently, Shion is manager of the academy, so an in-house academy at the Netherlands ACM. And this academy organizes trainings for ACM staff and also advises the board on learning and development. Last year, Shion was chairing the contact network for BEREC, which, as many will know, is the body of European regulators for electronic communications. The 2 previous years, she was interim manager of the Competition and Markets Unit of the ACM Legal Service. And prior to that, Shion held senior advisory positions at the authority. Shion is an Irish lawyer, and before she joined the Competition Authority in the Netherlands, she lectured European and competition law. Micaela also has extensive experience in competition law enforcement. For the past 5 years, she has been part of a team that handles competition cases in the telecoms and digital sectors at the CNMC. And she also worked for some time at the legal department of the Danish Competition Authority. And that was, and before that, she had already worked at the Spanish Competition Authority for I believe some 7 years back then, and at the time she led and coordinated merger reviews as well as antitrust cases in the energy and industry division of the CNMC. And last but not least, Jenny is a director for mergers at the UK Competition and Markets Authority. And Jenny is, I believe, the only economist on this panel today. Before joining the CMA in 2021, she worked for KPMG and RBB Economics, advising on competition matters, including several high-profile global mergers, market investigations, state aid investigations, follow-on damages claims, and abuse of dominance investigations into predatory pricing, loyalty rebates, and excessive pricing. I feel like there's probably no other competition in the area that hasn't been mentioned here. So a very warm welcome to the 3 of you. And I think since I finished with introducing Jenny, I will start with you to kick off our conversation. And I think maybe one piece that's quite glaring, quite obvious, that post-Brexit, the CMA, well, now has a more expanded role. And I think it's particularly obvious in the merger control space. And as the CMA is looking at global deals, it's hard not to notice that there are diverging outcomes that we're starting to see. And I think it would be interesting to have the CMA's perspective on what from the outset looks like, big divergence on the loom.
Thank you. So I think, first of all, perhaps it's just helpful to say something very brief about our mergers portfolio. So while we are looking at these international deals alongside other authorities, actually we continue to do a number of cases that have the potential to affect local markets in the UK. So, for example, earlier this year we had a lot of cases in the veterinary sector or dental services, and those are cases where it's just the CMA. We also have a significant proportion of our caseload involving cases impacting national markets in the UK, whether that's property services, financial services, or transactions in the agriculture and food supply sectors. So those cases we had before Brexit, we continue to have those cases today, and they do make up quite a large portion of our kind of mergers portfolio. If I look at multi-jurisdictional deals, working closely with other agencies internationally around the world, be that the FTC and the DOJ in the US or the European Commission, that's not something new. We always did that, and we've always worked closely with those other agencies. I think the thing that has changed following Brexit is the scale, the scope, and the intensity of that collaboration, and that's driven by the specific cases that we have. Where we do have these global mergers that are subject to parallel review, I think as an agency we recognise that collaboration is actually a really good idea, and that's beneficial not just for the merging parties, but it's also beneficial for us as an agency. And so today we do have a wide variety of close working relationships with a range of merger control agencies around the world, and it's fairly routine on those types of cases for us to be seeking waivers from the parties to enable us to have that kind of collaboration on individual cases. That collaboration can happen very early on in a case, for example, in a sort of fairly straightforward phase 1 review, as was the case in the Yokohama Trelleborg case that was cleared unconditionally at phase 1 earlier this year that I was involved in. But it can also occur right through to the end of a case and through our sort of more in-depth phase 2 review, again, as was the case, for example, in Broadcom VMware, which is another case that I've been involved in. Taking a step back, I think international coordination is important, and it's something that we do try to achieve as far as possible, but we have to recognise that consistency isn't an end in itself. The case outcomes for our mergers are evidence-based decisions. They're taken within our statutory framework, and our decisions are based on what's right for UK consumers and UK businesses. So as an agency, the CMA is not going to seek to avoid divergent outcomes. I think the other thing that it's maybe worth sort of pointing out is that in the UK we do have a voluntary merger regime. So actually we're only opening formal investigations into actually a relatively small number of cases. We have a team called our kind of mergers intelligence team, and they review, I think, upwards of 700 transactions a year to see whether those cases should be formally investigated and called in. And actually what we see is that a very large number of multi-jurisdictional deals are considered by our mergers intelligence team and dismissed. And then they may also be subsequently cleared by a number of other agencies around the world. So actually, if we're talking about international alignment and you're only looking at a kind of formal published case numbers, that's not actually really telling the whole story. However, I think it is inevitable that in a very small number of cases, you will see the CMA's position diverge from those of other agencies. And for example, that may be due to differences in the regulatory regime, or it might be, for example, that the evidence base that we have differs to that in other jurisdictions. And that was the case, for example, in Cargotec Konecranes, and also in Broadcom VMware, where there's a slight difference in outcomes. I guess just the final comment from me is that any divergence, I think, however, is very much the exception, and it's really not the rule. Thank you.
I have a follow-up question, actually. So in the most recent update of the CMA merger guidelines, the statement that vertical mergers are generally, benign, has been removed. And we have also seen an increased number of digital mergers that the CMA is looking at. Is it fair to say that the CMA increased its enforcement in the area?
Yes, so I think, again, I'd just start with saying that theories of harm involving horizontal overlaps actually continue to account for the large majority of merger cases that we're investigating at the CMA. We do, in a small number of cases, have more complex theories of harm, and those might be threats to dynamic or potential competition, or theories of harm where we're looking at accumulation of market power in vertical or adjacent markets. And we have developed our approach to those types of cases, and that's following a significant amount of work in this area. For example, we did an ex-post evaluation of some recent merger decisions in digital markets, and we've also drawn on a number of studies that have been done in the UK and internationally. Following that, in 2021, we updated our merger assessment guidelines to reflect our new approach. And I think, like many other agencies, we really recognised that there's been some under-enforcement in digital mergers, and that it was important that we adapt our analytical approach, our evidence gathering, so that we can consider the type of competition concerns that might arise in those types of transactions. That our new approach is set out in our guidelines, and those guidelines also signal our willingness to take decisions about mergers where we're applying this balance of probability standard, which is our standard in the UK, and that means more likely than not, based on the analysis and the evidence available to us, even where there may be some kind of inherent level of uncertainty. And that new approach has now been applied in a few cases. If I take a couple of examples, so both Meta-Giphy and Viasat-Inmarsat both looked at dynamic competition theories of harm. Now, in Meta-Giphy, the concerns that the CMA found were around dynamic competition in display advertising, and the CMA's approach in that case was both considered and upheld by the Competition Appeal Tribunal in the UK. But innovation and dynamic competition can also be a reason for us to clear a merger, and I think Viasat-Inmarsat is a really good example of that. So the satellite sector, this is to do with sending satellites up into space so that you can get Wi-Fi on your plane, for example. It's a hugely dynamic sector, there's lots of entry, and actually what we found in our review of that case is that the merged business would likely face significant ongoing threats from other entry and expansion, and that was likely to increase over time, and as a result we actually cleared that deal unconditionally earlier this year. So I think out of the thousands of mergers that might be impacting the UK, we're stepping in as an authority to prevent just a really small handful of deals, and of those deals that we're clearing, that includes deals carried out by major tech firms. For example, we cleared Facebook's Meta's acquisition of Customer, Microsoft's acquisition of Nuance, Google's acquisition of Looker, and Broadcom's acquisition of VMware. So it's not the case that even though perhaps our enforcement has stepped up a bit, that suddenly all of these cases are being blocked, and I think it needs to be kind of seen in that context.
As we are entering the mergers in the digital space, I want to turn to Michaela. Spain is somewhat different from many EU jurisdictions. You actually have a market share threshold, which on the one hand enables the CNMC to capture so-called incremental acquisitions, but also thanks to this market threshold, a number of deals have been referred to the European Commission, including digital deals such as Facebook, WhatsApp, and Apple Shazam. Can you tell us more about the recent CNMC's merger control experience in this respect?
Thank you very much. Well, thank you very much.
No, you just switched it off, I think.
Hello?
Yeah.
Well, thank you very much, Evelina. I also wanted to thank Lear for organizing this event, and Women@, for inviting me to take part on this panel. And just a small word before I go into the actual questions, just to underline that my words are only reflecting my opinion and not that of the CNMC. And with that very brief intro, I jump right in. So yes, indeed, one of the most distinctive features of the Spanish merger control regime, I think, is the fact that we have a market share threshold. I think within the EU now, Portugal has a pretty similar one as well. And basically what this means is that if following a transaction, a market share of 30% or more is reached, then a transaction will be automatically notified. And we feel that market share does capture, from our perspective, probably better than turnover, the competitive significance of a merger. And since, of course, we do look at market share with an open mind, you can use all sorts of metrics. It doesn't need to be sales-based. So you can have more relevant metrics for the digital sphere, such as number of active users, clicks, etc. And this is what has actually enabled us to look at a number of digital mergers, like you were referring to earlier. So if we look back, I think since 2019, we've analyzed approximately 25 digital mergers, and about 70% of these mergers have been only notifiable because they met the market share threshold. And this has been, what we feel has been interesting. It has enabled us to analyze cases in all sorts of areas, ranging from cybersecurity to anti-plagiarism software, online food delivery, and platforms to organize weddings. So all sorts of very varied sectors. And indeed, most of these mergers have been cleared unconditionally, but we still feel that having looked at a number of them, we have developed a better understanding of how digital markets actually work and what parameters we should be looking at and what theories of harms we should probably be taken into account. So we've analyzed multi-sided markets, the relevance of innovation, innovation-related theories of harm, the importance of ecosystems and customers overlap, or potential competition by big tech. When is it in market? When is it out of market competition? And for instance, last year, a couple of these mergers were cleared subject to commitments. We had a merger in the legal solutions sphere in Spain, and this involved the two main players providing legal tech, legal databases, etc. in Spain. So the combined market share was a little bit large. And after conducting our analysis, we realized that there were some risks. So, for example, we were concerned that given the portfolio of products that the resulting entity would have, there could be some bundling and some tying. So we basically reached a commitments decision whereby the entity agreed not to tie and bundle different products. There were other commitments, but just not to overdo it. And probably the most recent one where we've had a commitments decision is the online platforms to organize weddings, which was a lot easier to understand than some others we had to look into, like cybersecurity. But it's so easy to understand, it actually does illustrate the point. So basically, we were concerned that because the two entities had a pretty large combined market shares, it wasn't very intensive in technology. It was, and as if you compared with other digital markets. But it is true the market share was pretty large, and we thought, well, if we do think that these markets will grow and they are pretty contestable because barrier to entry are not that significant, we must make sure that multi-homing remains a possibility, and that the resultant entity doesn't have the capacity and incentive to actually stop rivals from growing and expanding and entering. So basically, we just reached a non-exclusivity. They agreed on a non-exclusivity remedy, which we'd used before in the online food delivery business and had worked. Well, that's basically the most recent merger cases we've been dealing with in the digital sphere. Thank you.
So I kind of want to stick a little bit with referrals to the Commission. So we have this new regulation that everyone has heard about, and following the introduction of the DMA and the DSA. So, the lack of mechanism for NCAs to really actively participate in the application of the DMA has kind of been, well, highly criticized, but didn't achieve much in that sense that it still doesn't have proper mechanisms in there. But the Commission arguably opened a door through the revised approach in its guidance on Article 22 of the merger regulation, welcoming referrals from member states for concentrations even where they fall under national merger control thresholds, aiming at, in particular, transactions in the digital and pharma sectors. What is your take on this?
Well, yeah, I fully agree that we may see a bit more action on that front from NCAs. I mean, I think it makes sense. National competition agencies in general have been under a lot of scrutiny because of possible under-enforcement in the digital sphere. I think the guidance is quite honest about this. There might have been an enforcement gap, and I think the guidance is pretty direct, and it does mention digital mergers, it does mention certain factors that remind us of all the killer acquisitions, theory of harms, etc. And when you combine this with Article 14 in the DMA, whereby big gatekeepers are going to have to tell the European Commission about all their acquisitions, then this could really be an avenue for NCAs to participate. And I think probably a welcome one from many sectors. But of course, as I mentioned earlier, maybe for Spain as such, it won't be that big a change because we do think that a number of these mergers might actually be notified directly to Spain. So Jenny talked about Viasat, Inmarsat before. That one was actually referred from Spain to the EC, and it was notified based on the market share threshold as well. So yeah, we could see some action there. And yes, there's been, some have said that maybe the NCA is not playing a very large role in applying the DMA. But I think we do feel that there is a little bit of a role to be played beyond Article 22 referrals when the Article 22 requisites are met. So, for instance, the DMA does enable certain competition authorities does enable national competition authorities to initiate certain non-compliance cases, even though it is, of course, for the EC to decide finally on the matter. They can also be part of the high-level group. There will be big efforts, I believe, to coordinate the results. And then also, you know, I think we're all familiar with the fact that the DMA has deep roots in competition enforcement. So if we want to make the DMA future-proof, I think continued enforcement will play a role in continued enforcement in the digital arena, I mean. And here there's probably some contributions that we may see from NCAs.
And would it be your unit then at the CNMC?
Probably, but to be honest,
that's where the enthusiasm is coming from.
But no, it is the CNMC, of course, but I don't think that the final layout is decided.
Fair enough. Xion, the ACM has been one of the pioneer NCAs really taking on the big tech, and you know, long before the DMA kind of took its shape. And well, most notably, I guess, the saga case against Apple. Tell us more about how is the ACM preparing and adapting to this new EU regulatory regime on the digital economy. And you know, in addition to the Digital Markets Act, I suspect the authority is already anticipating the Digital Services Act, the Data Governance Act, the Data Act, the Artificial Intelligence Act, and.
Yes, thanks, and platform to business. I'm intrigued about what Michaela said in relation to cybersecurity being more complicated than getting married. Because I always think with cybersecurity, you know, it sounds very sexy, but in fact, it's really good housekeeping. It's about not letting anybody in who you were told not to let in, keeping the door locked, keeping the floor clean. Making sure that everything is installed when it should be installed. So it's actually quite boring in its implementation. But yes, thank you, Evelina, for the invitation here today. It's a fantastic venue and very interesting to see the cinema set up here. So I just hope you don't start throwing popcorn there in the back seats. We have been working for a while in digital markets at the Netherlands Authority for Consumers and Markets. And again, like Michaela, I add the caveat that I don't speak for the ACM. I don't want you suing me afterwards. We've got 3 areas we focus on, and that's right throughout the ACM. We have consumer protection, we have antitrust enforcement, we have merger control. Obviously, we have also telecom regulation and energy regulation. And so what we focus on are dark patterns and effective transparency, which is mainly on the consumer side, open and fair platforms, which is across the board, and vendor lock-in, more on the competition. And you mentioned the Apple case. That was a decision that tried to tackle the issue that we saw quite early on, that dating app developers were obliged to use Apple payment systems. They're not direct competitors of Apple, but they have to use Apple payment systems for in-app services purchases, and they weren't allowed to link different payment methods or to even refer to the possibility of different payment methods. So we issued a decision finding Apple dominant on the aftermarket for App Store services on iOS for dating app providers, and the abuse being the imposition of unreasonable contractual conditions. And we imposed a cease and desist order subject to periodic penalty payments of €5 million per week with a maximum of €50 million. And that was then upheld by the Dutch court in December 2021, and Apple has changed its conditions in the meantime, but of course has lodged an objection and an administrative appeal against the decision. We have a system in the Netherlands whereby before the court goes to, before a decision goes to formal appeal in the court, the parties may enter an administrative appeal whereby they object to the decision within the authority. So that's the stage where we are just yet. But that points to something that you refer to, which is, you know, the fact that these cases take a very long time and suck up a lot of the authority's resources, which in a way, when it comes to the ex-ante obligations in the DMA, you see that may actually help in that situation because the Commission may be in a better position in terms of the length of such a case. Anyway, the result in the administrative appeal should be coming very soon, though of course you never know with these types of cases. In terms of adapting to the new digital regime, I should say, of course, we're terribly well prepared. We're reasonably well prepared, I feel. On the DMA, we will have detached people to the European Commission, and we fully intend, as Michaela said, to report violations and to be active in joint cases. And we see that as the future of the legislation. On DSA, there's likely to be a lot of coordination required. The goal of the DSA is really to create a safe online environment, but it's quite broad in terms of what it's likely to ask from us as enforcers, because we'll have a certification role in terms of certifying trusted flaggers. We'll have, there's a role in there for the criminal prosecutor, so there's going to have to be coordination within that national authorities. Also, as you have a layered system of obligations applying to different types of parties in the markets, Netherlands is home to companies such as Snapchat and Booking. And we expect that they're going to be very busy with gearing up to get their compliance in order for the new legislation. We have designated teams in the consumer department, specifically on the DSA, a digital division, but also in our telecoms division, because there we have the advantage that we have a lot of telecommunications expertise available, which is very useful in these cases. And we will have 50 new employees on the digital side. In terms of DGA and DA, well, the DGA is to provide for data sharing between public and private holders of data, using the Dutch pronunciation. And it should allow the establishment of trustworthy data intermediaries. But this legislation has been sent to the Dutch Council of State, which gives an advice to the government on the legislation. And the Dutch Council of State has been quite critical on certain aspects in relation to who is to do what between the Data Protection Authority and the Authority for Consumers and Markets. They're, for example, saying that decisions in relation to privacy should be binding on the ACM. And there are also different views on whether, to what degree you need to institutionalize the relationship, if you like. Is it sufficient to have a protocol between the two authorities? Should there be legislation governing the interaction between the two authorities? Or should you actually leave it informal so as to allow for flexibility depending on the type of case they're dealing with? However, you know, it's very good that the respective authorities are thinking about, that the Council of State and the Legislature are thinking about these issues. But the authorities themselves, we have already several years ago established a Digital Regulation Cooperation Forum. So we have already been talking to each other about the legislation, about various aspects of implementation. And I think at the end of the day, whether they choose for a more formalised or a less formalised situation, you know, the main thing is that you have a very good spirit of cooperation between the relevant national authorities. And that's going to apply as well for the artificial intelligence legislation when that comes in. That will mostly concern product safety authorities, but there is a transparency element in that legislation as well, which may also be relevant for the ACM. I think that's all of it. Platform to Business, already we issued guidelines on that last April. So yes, getting up to speed, I think.
There's like a million of follow-up questions flying through my head, but like maybe I'll just ask one that comes to mind immediately, which is, you mentioned you hired 15 people. 50. Oh, like that's probably as many as Digicom did, no? But, you know, like somebody who is the manager at in-house academy, I suspect you play an important role in bringing up these people, but also the rest of the staff to be fit for actually working on digital markets.
Yes, we don't have all of the 50 yet, by the way. We are recruiting them actively, but we don't have them all in. But yes, we're focusing very keenly on how to educate people, you know, quickly and get them working very fast. The problem with a lot of these millennials is that they don't, as someone who stayed for 20 years in the same organisation, but they don't always stay. But the Digital Markets Act, we have trainings on that up and running. And in-house experts training people up with in-house knowledge modules, as we call them. We're also working on simple ways of explaining the relevant legislation. Not just, you know, these are similar tools that you can use in-house and also in your guidance, because obviously you also have to educate the business world on the relevant rules. But we use micro-learnings and e-learnings so that people, no matter, you can run your physical modules at particular times of the year, but you may have people entering, you know, every single month or in the middle of the month. So we try to ensure that there's something online for them that they can click on, that they can get an orientation in terms of all this new legislation, for example. We'll also look at the possibility of running trainings together with other authorities. We've done this in other areas with some success. And as I said, we're lucky at the ACM that we have a telecommunications department in-house, so we also have a module on telecommunications techniques to get people up on the what would you call it, the lexicon, the relevant terminology, so that they understand what they're dealing with.
Well, the way you handled the comparison between the wedding organizing and cybersec, I can see that you guys are masters of simplifying very complex concepts. Michaela, you mentioned already that the setup is not yet fully set out, right, at the CNMC, but still, you have been adapting, right? And the institutional setup is probably underway, if it's not yet fully fledged out, really to be fit to enforce competition in digital markets.
Well, yes, the CNMC is a little bit like the Dutch Competition Authority in terms that we have in one body competition enforcement and a number of regulators, including telecoms, energy, postal services, etc. And there's another specificity, perhaps, which is that when we investigate a case, it is the competition division investigating, but then the final decision is taken by the council, which is a different body. So basically, I'm going to talk to you about how we are set up in the competition division, which is where we investigate. And there we have a number of horizontal units and some sector-specific units. So within the horizontal units, there's the economic intelligence unit that has been relatively recently created. And basically this unit applies data analysis, business intelligence, and artificial intelligence to help detect and monitor infringements. So they're basically enhancing our ex officio detection capacity. And whilst they've been focusing more in bid rigging, to be honest, this also means that we now have in-house data specialists, mathematicians, people with the knowledge to understand many of the algorithms, etc. So I think for the teams, and this is where I work, that do the actual enforcement, having this very specific profiles in-house is actually very relevant. And of course, the economic intelligence unit also helps with other aspects that help us detect more effectively, and they also help preparing down rates, etc. So what relates to pure enforcement, that would be in the information society unit where I work. And this is a specific unit that deals with all mergers and all antitrust cases in both telecoms and digital sectors. So we are fairly specialized. And this is perhaps a little bit different to other setups. But my view is that it's actually quite helpful to be this specialized. I worked, and you mentioned it before, I worked for a long time in energy. And if you have a merger in energy or an abuse case in energy, you really have to understand the regulation very well. And it's not something that you can learn that quickly sometimes. So having very specialized teams, I think, is quite helpful, because you make yourself familiar with the relevant competition parameters, with new theories of harms that are being laid out, or that lots of new papers are coming out constantly. And I think this has proved to be quite effective in our experience. It might be a little bit surprising as well that we do both mergers and antitrust, and whilst within the team there is a certain degree of specialization, I think that it's quite good, because it ensures consistency, and there's a knowledge flow that, in my opinion, is working reasonably well. Apart from the competition division, we also have an advocacy division that has looked into digital aspects. So they've done a number of reports, for example.
Criticizing the Commission for not including the NCAs?
Well, I'm not sure we've been that clear about it, or they've been, for that matter. But well, it's also quite useful, because they look very much in depth into a given market. So, for example, online advertising. And then if you have a case that deals with ad tech, then there's a lot of knowledge to draw from.
So you mentioned novel theories of harm. One case that CNMC is currently working on is into booking.com. And I think it would be really interesting to hear a little bit about it. I know it's an ongoing case and there will be limits, but how is this theory of harm of hindering public interest actually works? How is it different from, the more traditional theories of harm that I studied at law school, for Article 102?
Well, I'm starting to think that Spain truly is different, because we do have a section in our law, that what we call Article 3, that is the unfair competition article. And that's perhaps not necessarily out there in every jurisdiction, and it's most certainly not in the treaty. So I'll tell you a little bit about booking later, but so basically we have this article whereby if there is an act that infringes the the Acts of Unfair Competition Act in Spain, which is a specific act that basically doesn't deal with pure competition. It's more what happens to two companies trading if one is using unfair methods of trade, etc. So if there's an infringement of that act, and there is this infringement affects the public interest, but not any public interest. The only public interest we're interested in, and the law is pretty specific in this, is the distortion of competition. Now, I see what you're getting at. Isn't there a bit of an overlap? And of course, there could be, but it is the way, from a legal perspective, this is drafted is quite specific. First, you have to have an infringement of a specific law that is not the Competition Law Act, and then you have to see this nexus to competition, which is why we look into it. And this is relevant because the Unfair Competition Act is normally enacted by the civil jurisdiction. So when would we step in? Only when that act of unfair competition can really affect competition. I don't know if I'm making myself clear, or I'm just using lots of...
Let's see what the audience thinks.
But to be fair, when the new Spanish law was passed, there was some criticism of this article. So not everybody is very happy about it, and it has been used in very specific cases. I can think of a couple energy cases in the recent past. But it is true that when we opened the booking case, we opened investigations into certain conducts. I cannot say much because it's an ongoing investigation, so I cannot say anything that is not in the press release, and I will really look at my notes. But we did open investigations into conduct, and we are looking into more traditional, if you will, Article 2, abuse of dominance, and acts of unfair competition under our Article 3 of the Spanish competition law. So what is it we're looking at? And now I look at my notes. Well, in terms of abuse, we're looking into whether Booking could have abused its dominant position by possibly imposing unfair trading conditions on hotels and through commercial policies that may have an exclusionary effect on other OTAs and other online sales channels. And in terms of unfair competition, we're looking into whether Booking could have exploited a situation of economic dependence on hotels, which is, again, an infringement under the normal Unfair Trading Act. But as I said, this is not the only case in which we're looking at this aspect. We've also got a case open where we're looking into Google and neighboring rights relating to press editors and news agencies. And there we've also opened a case, and we're looking into a possible infringement of the national equivalent of Article 102 of the treaty and acts of unfair competition. We're looking into possible unfair commercial conditions imposed. And in terms of unfair competition, we're looking at a possible infringement of the National Copyright Act and a possible exploitation of a situation of economic dependence.
Not the novel theories of harm might not be that novel.
No, I don't think so either.
Yeah.
And mind you, most of the novel theories of harms can actually be traced back to pretty traditional ones, in my view.
Jenny, turning back to you. So the UK has its own digital regulation in the pipeline. What can we expect there?
Thank you. Yes, so in the UK, the digital regime is going to apply only to those firms with substantial and entrenched market power, which gives them a strategic position in at least one digital activity in the UK. And then firms meeting that threshold will be designated as having strategic market status, or they'll be kind of SMS firms, as they're going to be termed. And like Michaela mentioned in the DMA, there's obviously a provision about reporting mergers. For example, in the UK, the new bill will introduce new reporting requirements for mergers by SMS firms. So they will have to report any merger which has a value of at least £25 million and a connection to the UK to us. I think in the past we found that digital mergers haven't consistently been made public before they've been completed. They can be integrated and completed very quickly, and then they can be quite complex to unpick after that completion has happened. So these new reporting requirements will ensure that we're made aware of the transactions in a timely manner, and we can have the opportunity to consider whether it's going to impact the UK and whether they do warrant being called in for a formal investigation. That bill is currently going through the usual parliamentary process in the UK ahead of becoming law. and we'll then implement that regime as quickly as possible once that legislation has been passed. I think, like Sian mentioned, she's talking about sort of recruiting and hiring new people. The digital regulation in the UK will obviously be kind of broader than just that mergers piece that I've talked about here. So we have our digital markets unit already operating in shadow form, and we're continuing to hire new people so that we can be ready to implement all of those regulations once that becomes law in the UK.
In addition to the digital economy, the Green Deal is another area that has been, well, really, I'd say, firmly at the top of the agenda in Brussels and across the EU. And various policies to promote sustainability have been driving the day for many NCAs, including the ACM. Can you talk to that a little bit?
Yes. The ACM has been active on the sustainability issue for a long time, really, because we had cases on sustainability as far back as 2003, 2013, 2015, and then in 2020 we published draft guidelines and publicised some ideas to try to move the debate forward. The timing was very opportune because the European Commission, of course, was planning to revise the horizontal guidelines, and we felt that if we pushed the debate very actively, also, of course, there was an increased awareness on the part of the public. They were interested in the issue, and it was just, we were able to get the ball rolling on it. We set ourselves to exploring what would be possible, and we came up with this idea of, in specific and well-defined circumstances, that we could facilitate sustainability agreements. In other words, companies, wanting to work together for a sustainability goal, and we could include in the assessment of what's a fair share to consumers, because under the competition laws, a fair share of whatever benefit that has to result from such a potentially anti-competitive agreement would have to go to consumers. And we found a method in certain cases of including affected consumers and non-affected consumers in terms of price. So we put forward these ideas, we published our guidelines, and we started to deal with cases. And we considered quite a range of cases between the time of publishing the draft guidelines and now. Agreements regarding the joint purchase of electricity from a wind farm, the joint setting of CO2 prices, joint storage of CO2, the removal of plastic handles from multi-packs of soft drinks, and an arrangement by garden centres to combat the use of illicit pesticides. So we got quite a different range of agreements in there. And we published as much as possible to try to give other companies an idea of what can be possible, what is allowed, what will be permitted. So we're very pleased, really, with how this discussion has progressed. Also very pleased that the European Commission has a whole chapter on sustainability in the new horizontal guidelines. Not all of the ideas that were put forward by the ACM have been embraced by the Commission. The Commission still is very strong on emphasising that the benefits that accrue to the user should be benefits for the same users as those that have to pay the higher price. In other words, that you should be dealing with consumers specifically within the relevant market. But they, besides that point, they are showing an awful lot more flexibility in terms of what will be acceptable. And I think that that's also visible, by the way, in there was a paper published yesterday on sustainability in mergers, and again, that point was made quite strongly by the European Commission. So now that the Commission has come with its guidelines, we had said beforehand we will then adapt our guidelines, which we will do so. And we're also going to publish, I think, a new practical example, probably on waste recycling, to give companies more guidance again on what is to be permitted. And we hope that will result in more of these agreements. I think it's interesting the role that the consumer is playing on the question of sustainability is also visible, in other areas of competition law. It's very, very visible as well in the digital area. where you see that consumer preferences are taken into consideration. Well, of course, they always were, but now they're very important in terms of defining relevant markets. But also, we have done some work on consumer protection in terms of sustainability claims or greenwashing, where you see that companies are putting themselves out there as being more environmentally friendly than they are in order to gain a mass of consumers. And so we're also running campaigns providing companies with rules of thumb on how to ensure that their sustainability claims are also reflective of the sometimes uncertain environment in which they're working.
Yeah, you may not realize, but we're actually sitting on paper chairs. Like those of you who will get on the stage will realize that these are very sustainable furniture. Paolo, I don't know if we have an option for Q&A from the audience. So my dear panel has agreed to take some questions, if anyone dares. Go ahead. Do we have a microphone? Yeah. For Q&A?
Thank you. So my question is, it sounds like the authorities, they are competing for resources in terms of employees for handling the big tech, and I'm wondering if is that really necessary? Wouldn't it be better maybe to have some kind of specialization, having the Commission deal with these types of cases? Just wondering what you think about that. What is the role of the national authorities?
I think that's a very interesting question for the future, perhaps. Who knows? The idea has been forwarded before that you would have the Commission as some sort of super regulatory instance with, satellite authorities in member states, perhaps even specialising in particular issues. I don't think that we are there yet. But in terms of what you do see happening, which I think is an interesting development, is that you will see particular types of authorities taking particular types of cases, not in the sense of a deliberate specialisation, but because those are the cases that they're getting on their national territory. So, it can be, I notice an emphasis here on copyright, which is a topic, intellectual property, which you may perhaps associate with Spain, with other institutions that are located in Spain. You see an emphasis on the fact that the legislation is dictating that the complaint about the company located or established in the member state should go to the authority in the member state. That may also lead to the type of specialisation to which you refer. Maybe that is the future.
Yeah, I think traditionally what we've been seeing is the position that there is a certain complementarity. And if it is a very clear 101, very clear 102 case, the Commission can always take it. So in that regard, there are mechanisms in place that will avoid duplication of efforts. It's not only the possibility that the Commission can actually make the decision on that case, but it's also we have a host of mechanisms that do ensure cooperation. So. And in a way it is effective because sometimes you could have local problems, and it does make sense that you have the resources to look at it from a local perspective because maybe it's not that relevant at an EU level.
I can see.
Okay, here we go. Question on institutional setup, which sounds boring, but realistically has an incredibly important role to play in how decisions are made, how they're challenged, and the way in which process works within an organisation. Whether that's within the new digital regime or through mergers. In the UK, we've got quite a high standard of proof, the judicial review standard, which is slightly different and applies slightly differently in the context of the General Court in the EU and the ECJ. So I just wondered whether there was any reflections of the panel on how decisions are being made internally and the possibility for realistic internal challenge that may not necessarily need to wait for the courts to look at specific cases.
Is this? Yeah. I guess if I think about, in particular, mergers at the CMA and the process that we have, it is slightly different to some of the other jurisdictions. So when a case is referred from phase 1 to an in-depth phase review in the UK, we have an independent panel who are appointed to make the decision on that case. And those panel members will decide both on the substance of the case and on the remedies that might need to be imposed if they do find a substantial lessening of competition. And that sort of system is designed to sort of enable a relatively speedy and efficient process, but also to make sure that the decision-making is held with an independent group of people. And that's, I think, particularly important in cases where perhaps you might see a decision on an SLC that requires sort of fairly significant remedial action in the market as a result. So the system that we have in the UK is that we have these kind of independent panel members who are drawn from a wide range of backgrounds, be that kind of law, economics, finance, business, and they are actually the decision makers in our phase 2 merger cases. So while it is the case that the standard of review at the CAT is one of judicial review, actually the system that we have in place in order to make those decisions is one of these independent decision makers. And whilst we think the process works quite well and it's sort of open and transparent, I think we're always keen to see whether there are areas for further improvement. So what we've actually done over the summer is we launched a call for information on our phase 2 merger review process, and we've been engaging quite extensively with lawyers, with economists, and also with merging firms who've been through our merger review process to understand from them whether there are greater opportunities for them as merging parties to engage with those independent panel members, both on the substantive assessment of the merger and also on those discussions on remedies where those are relevant.
Any reflections from either of you?
Well, just in terms of standard of proof, there has been a piece published recently by a well-known Dutch economist, Erik van Dam, which is very critical of the standard of proof in Article 102 cases, which has led to a discussion in the Netherlands on the effectiveness of the Dutch equivalent Article 24 in the national legislation of 102, and also discussions on how to deal with increasing concentration, oligopolistic markets, and our chairperson, Martijn Snoep, has been calling for this reason for the introduction of a market investigation tool in the Netherlands, as in terms of trying to have some method of intervening in markets before the problem explodes into a long-lasting abuse case.
Any final thoughts?
Well, not really, not specifically, because the system is a bit different in Spain, and the investigation and the decision phase is also separated, and then it's subject to judicial review by standard courts.
Well, on that, I can see Paolo came back to give us a sign that this is where we thank our panel. Thank you very much for joining us today as well, and lovely remainder of the day for everybody.